Well, it's 9 minutes after 2 o'clock, and this is a meeting that's called by the chairperson of OFB, and it's the Special Economic Service meeting. And the individuals, of course, who are normally involved in this meeting, maybe the best thing for me to do is just let's go around the room again and just indicate who we are and who we represent. I am Speaker Wampat, covering for Speaker Ben. I'm his vice chair of his committee, and he's asked if I could chair this for him this afternoon. And I know his staff members are here, and Chris, of course, his right hand and my right and left hand are here with me this morning. So I'm this afternoon. So we'll just go around if we can, introduce ourselves.
Chris Budassi from the Office of Finance and Budget.
Senator Duenas, Guam Legislature.
Gary Hiles, Chief Economist, Department of Labor.
Carl Pangilinan, Acting Administrator for GITA.
Ed Cruz, Chief Information Officer, Bureau of Information Technology.
Benita Manglonia, Acting Director, DOA.
Doris Flores Brooks, Public Auditor.
Aline Yamashita, Guam Legislature.
Albert Parrish, Chief Economist, Bureau of Statistics and Plans.
Senator Toniana.
Okay, thank you very much for joining us. And we hope that a representative from Revenue Tax will be able to join us this afternoon as well. You have before you an agenda, and it's a pretty hefty agenda, but I think from your last meeting is that, there were some indications, of course, that some of these issues would need to be addressed in order for us to move forward. My understanding also is that at least the very first item on the agenda, which is the fiscal year 2011 expenditures, that there's going to be additional information that we needed. So we'll just go ahead and table that for now until the next meeting. Am I correct?
Yes. We had been anticipating getting the presentation from the Income Tax Refund Roundtable from Department of Administration, and we wanted to look at that presentation as part of the item number 1. So I think we could table that till the next meeting, which would be on the 22nd, unless any of the members want to bring anything up.
I do recall when we did our audit on the liabilities that we had requested the Department of Administration to prepare on a going forward basis quarterly financial statements, similar to what they did for the transition committee.
Okay.
Oh, okay. Anyway, where is Department of Administration in providing that information? Because that the one that was provided to the transition committee was quite helpful in the sense that it had projected the deficit to be about 83 million, and then the final audited number ended up being about 71 million. And that was because, tax refunds was still in a flux. So where, I think we had gotten assurances from DOA that they would be able to provide something on a quarterly basis, and we're still waiting for the March 31st information.
Doris, I know that we're a little behind because they were focusing on a lot of things, that a lot has happened the last 6 months, and especially like June 30, they were focusing on the audit.
Sure.
Trying to get the audit out, so they're a little behind on that, and we're trying to do catch-up work right now.
So I guess maybe in time for the next meeting, would you have a March 31st preliminary financial statement?
We'll work on that.
Okay.
And also, how about the June statement? When would you expect that to be ready, I guess? Is that something that would require an additional lag?
Like I said, we'll try to get everything in together. Hopefully we will be able to finish it.
Can we get that presentation also from the income tax?
That one actually was supposed to be delivered to your office yesterday.
Okay, good.
And I'd have to check why it was not delivered yesterday.
Okay, as long as we can get it before the next meeting.
Yeah, you should have it.
Okay.
Okay.
Thank you.
I think it's important to stress, the importance, I understand, of this, all the information that the committee is going to need, because as you, I'm sure, have seen, that this year's whole budget hearings are very different from last year. There's a lot of information that's needed. We're looking at a biannual budget. We're looking at, some other items that we're going to see here, and not having this information makes it very difficult, not just for the committee to do its work, but for us, even as a whole, as a legislature, as to when we're going to actually, have session to address the budget. So it's really important that, I know you said that you're behind and you're catching up, but I really am going to impress upon you to
Speaker,
make this a priority.
Yeah, one of the things that Chris was asking was the cash flow, and that is what I mean, that's our tool of managing the cash. I don't know really the relevance.
No, it's just the presentation that you gave at the income tax refund roundtable.
That was the cash flow, basically, of what.
I think the relevance is that you had projected expenditures for the out months. So for June, July, August, September. So we'd want to look at what those projections are in the 8+4 of 8 months of actuals, 4 months of estimated. So that's the relevance of that information.
Okay, so does anyone of the members have any questions, Senators, on item number 1? Okay, so we're going then to item number 2, which is the debt service structural refunding. I'm going to ask Chris, maybe if you can just give us a brief background on what is it actually that we want to do here.
Okay, sure. Thank you, Speaker. In your handouts, there's a handout that looks like this, and it's got yellow shade on it. These are pages from the proposed legislation, which is actually now Bill 145, the biennial budget. And within that, there were several what I would call regular debt service payments that are part of the Annual Budget Act that are basically going to be restructured or paid from a different source other than what they're normally paid from, whether it's general fund or a special fund. And when we had the public hearing for Bill 145, it was still unclear yet on how this restructuring was going to occur. And so what we did is, because we're getting short on time with the budget, we're looking at going out on the session floor for debate in August. The reason it's so important that we nail down what the structure of this is because the money that's normally used to pay these debt service payments is being reprogrammed to pay for operational expenses in fiscal year 12 and also in fiscal year 13. And so what the committee is trying to understand is what is the cost associated with this restructuring, and just to make sure that it's something that's going to be achievable, because if we aren't able to do this, then we obviously have to use, shuffle money around to be able to pay for the debt service and then find more money to pay for the things that the debt service payments are covering. So, Carl, if you have an update.
Yeah, thanks, Chris. I can speak to this. The notion of, and they call it different terms, depends on which firm that you ask. But, we'll call it the scoop and toss in this instance. Scoop and toss? Scoop and toss, yes. Yeah, you essentially scoop whatever debt service or payments that are due or come due for this or a particular period, and toss it to the back end, or along the life of the note. Now, this is something that, it's not a new exercise. This is done, in different formats. There's variations of it done, just even at the local level in many financial institutions. But, essentially, we were supposed to have our underwriters on board. As of yesterday, we had a little snafu in terms of public notice, but our next board meeting is next Friday. We hope to have our experts on board by then. Again, it was explained to us just on a notional level, whereby you take the debt service payments coming due, and again, just shift them to the back end. And again, this is something that's been done before, not here on Guam, but it's been done in different municipalities. we're looking at different structures right now, and until we get our underwriters on board, we'll have that firm structure ready for you, and I'm confident we'll have it ready by the next meeting, which I think is scheduled for the 22nd. At the very least, the final meeting on the 29th, but we'll have something for review by the next meeting.
So if you're going to shift it to the back end, meaning then, at least my understanding of it is that then you're going to not pay for it because you're going to pay for everything else like operations.
Mm-hmm.
And what time frame are we looking at in which eventually we're going to get to paying off these debt service?
Again, we're looking at different scenarios right now. For now, I think we've identified 3 issues, general obligation issues, that again, we're looking at taking debt service payment and extending it out toward the back end of the term. Again, I don't want to comment on the structure right now since it's not firm and finalized. I know there's some questions with regard to what the cost is going to be. The way I understand it right now is that it frees up cash flow for now and just extends it to the end. So is there a cost? Yes, there's a cost because there's but there's a cost over the long haul, and there's not a today cost.
In more simpler words, this is like loan deferment. For let's say the average person who owes on a loan and can't pay, then he's asked the bank to defer the payment. You capitalize the interest, and then you're going to extend the amortization period.
It's somewhat similar to like a CAPI type of yeah.
So the essence is we can't afford. We're not going to pay debt, but instead we're going to pay for operations. That's the essence of it.
Again, my role here is to free up the free up the money. Yeah.
And
Okay.
and the reason why, of course, we asked was I was looking even at one specific, debt service is the TEFF, the Territorial Education Facilities
Mhm.
Fund, which we use a portion of it, for DOE.
Mhm.
And we noticed that for this year, the amount is actually the total amount, and I'm saying, how then are we going to be paying for the debt service? And the whole amount's going to be used for operations. And so I'm just thinking, how, I mean, right, that's only one example for me,
Sure.
but as for the members to see here, all the yellow highlights that you see are all of the obligations and the dollar amounts that the government owes. And granted, you're right, because normally the very first thing we do is that when we look at the budget is we carve this all out, first of all, and
Mhm.
put in reserves and say, we're not going to touch it because we owe this money since we have to pay.
Yeah.
And so, of course, we look forward to hearing exactly how this is going to be done. This is very critical, that, everyone's going to be, at the table, you see, to agree to this. And you're saying the underwriters are not yet on board. Do they know that this is even being considered?
Absolutely, yeah.
And is this a recommendation of theirs?
It was, I mean, they've seen the bill. A lot of them seen a copy of the bill. So in their proposals, they've included, as part of the structure, varying options on how to accomplish this mechanism.
So I'm hoping then that when the time you come to the meeting and the underwriters are on board, that you'll be able to give us, tell us.
A complete
what
overview of it, yeah.
Not just the overview, but to include in the overview the impact to the government. How would that affect our bond ratings as well?
Okay.
Okay, thank you. Does anyone else have any questions?
Just some clarification, maybe for viewers who might not be able to follow because they don't have this in front of them, but essentially we're deferring $38 million of principal and interest of debt service, potentially, in fiscal 12, and the extended cost on that could be, I mean, we have an example in here in item 2C where it could cost us an additional $42 million to defer that interest, or I'm sorry, that principal and interest of $38 million. I don't know if it will be that much. This is kind of an extreme example because the interest rate is set at what was in the bill, the cap, or the highest amount. But it's going to have a cost associated with it, and I think that's what the committee needs to get, as well as the structure, but also how much is this going to be additional cost to what we're paying today. And then the next item 3 is the same issue with regards to the fiscal 13 restructure. So, and that is an amount of $32,893,000 with a potential cost of roughly the same amount, additional cost of roughly the same amount at the far end of the interest rate.
So if I understand you, Chris, we're talking almost $70 million of debt service that's going to be deferred?
No, I'm sorry, 38 million in fiscal 12 and 33 million in fiscal 13. The 70, yes, over 2 years it's 70, correct.
Million that will be deferred.
Correct.
Because in order to fund operations.
Yes.
So rather than raise revenues, we'll just not pay our debt.
And this is also, and I think it's important to clarify, this is not part of the $344 million that will be borrowed that's being proposed to be borrowed in the budget. This is aside from that, correct?
What is the $344 million?
For income tax refunds.
Okay.
Okay, item 4 is growth of structural deficit due to under provision of income tax refund payments. So we have here now, thank you very much, John, for coming. So can you please?
Thank you, Speaker. Everyone has this handout. It's the color-coded one. This issue can be a little complicated. We've studied it for quite some time, and so I'll do my best to try and explain it. I don't know if, and what we're trying to do is to bring this issue up as a matter of policy on how we handle the provisioning of income tax refunds with the annual budget. And based on the current methodology, in certain years we've come in lower, and in certain years we've come in higher. And it's just to kind of bring this to the attention of the Special Economic Service to try and see if we can come up with either a more precise methodology, or if we all agree the current methodology is okay. So I'll go through and explain these exhibits, and bear with me, and please, if you have questions, just ask. The first exhibit shows if we were to be current in our income tax refund payments, the provisional set aside in a given fiscal year, in using fiscal year 10 for an example, would be paying for the tax year 2008 refunds and the tax year 2009 refunds. And the way that we look at this is fiscal year 10 starts in October 2009 and runs through December 2009. And we pay the tax year 2008 refunds during 2009. So you've got 25% of your income tax refunds provisions in the fiscal 10 budget that if we were paying our refunds on a regular basis like we want to, we would be paying 25% of the tax year 8 refunds from the provision of fiscal 10 and 75% of the tax year 9 refunds from the provision of fiscal 10. Is everyone okay with the chart? And it's color-coded to show you tax year 2009 crosses fiscal 10 and fiscal 11. The exhibit on the next page is the experience or the history of how we've done with the provisioning versus what the actual tax liability has been. And so on the left-hand side, you see the fiscal years and what the provision was in column B. And then in column C through I, you can see what the tax years are and what the liabilities were during those tax years for income tax refund payments. So you can see in tax year 2006, we were short by 1.3 million. Tax year 2007, 7.8. Tax years 2008 and 2009, we actually provisioned above what we needed, and that had to do with the large provision in tax year 10 of 134 million and 100 million in 2011. And then you can see in tax year 2010 and tax year 2011, we're showing bigger under provisions. And so, from a policy standpoint, I guess we need to determine do we need to bump the provision going forward? And the last page shows what that 16.4 million and the 4.5, where or how it's calculated or where it comes from. Yes, ma'am.
Just as a point of clarification, okay, my recollection, and using FY 2010 numbers, all right, is that what Revenue and Tax did was by May of this year, May 2011, they had finished processing all of the 2009 tax refunds. They had not even estimated and begun to process 2010. Okay, we've always been a year behind because, you know, the system is pretty antiquated. It's manually inputted, you know, and that's a separate discussion, you know, which, you know, technology needs to come forward in order that we can, as people file their tax returns on April 15th for calendar year 10, we know exactly what it is. But we have been waiting almost a year later to get that information. So your number in 2010 is really a guesstimate, a reasonable estimate based on the history of 2009 and priors.
Correct, and
Okay.
these numbers actually came off of the report provided by Revenue and Tax at the Income Tax Refund Roundtable.
Okay, I was off, yeah.
Yeah, and we'll give you that report.
Okay.
But, John, maybe you can tell us, you have started the 10 processing and you're into it.
Yes, we started last month, I believe, and so far we're looking at completing the processing of 2,000 whatever's filed by the end of August. So, but again, you know, returns are still being filed, and October 15 is the extension date. So we're expecting maybe several thousand, you know, between August to October. So in the meantime, I think we should be able to finish whatever is actually filed by the end of August.
But again, the numbers, well, I don't know if these are the exact numbers now. You know, now that 2008, we should really know altogether how many tax refunds were owed, you know, and how did that compare to what was the budget? Maybe I'm asking a different question. You know, going back, you know, how do these numbers, are these like the 2008 number? Is that actual or is that still the estimate? Because, you know, because of the delay of where Department of Revenue and Taxation is, they would not have finished processing all of the 2008 until the last 6 months or so as they were working on the 2009. That's really my point. From a historical point of view, it would be good to get, based on actual processing by Revenue and Tax, how many tax returns in total were filed and what the total tax refunds owed amounted to. And is that is Revenue and Taxation finished with that?
Yes, actually, when we did the provisions for refund estimations for fiscal year 2012 and 13, we were using the actual amounts that were actually refunded. So we do have those numbers.
Okay. Would you be able to provide it, let's say, on an annual basis?
Well, actually, they were provided at the roundtable.
Okay.
So I think
All right.
through tax year 2009, it was actuals,
Right.
and
Okay.
only 10 was estimated.
Right. Okay.
That's my recollection.
Okay, that's fine. Thank you.
But it kind of goes back to the original point about, I think currently we're using a 3-year average for the provision, and I guess part of what this discussion can go into is that the right way to do it, or is there another way to look at it that might make us hit the mark a little better? I'm not sure, and that's, you know, we wanted to put this information in front of this committee so we could generate ideas and discussion, and maybe we can put that at the next meeting, so give everybody a chance to look this over and think about it and see if there's maybe a better way to handle this.
That's right. The statute requires that we look at the last 3 years, and then we look at the increases that we anticipate for the. That's basically it. Right. Then we do the average, and then we estimate for the provisions for refunds.
Well, like, for example, what caused a little bit of angst was the make work credit, because that was new, right?
Yeah.
And that was a new provision and for calendar year 2009, and we're still estimating what it might be for calendar year 2010, right?
Right. And if you notice the provisions, if you look at the actuals for 9, there it's around, I think, 116, 117, 117 or 116 $million. But now our projection now going for 12 and 13 are below that, our projections. Yeah, and that's because of the making work pay credit.
So I know you indicated that the law says that you need to go back and look, at the last 2 years. But I think what Chris was saying, I think what the committee is also asking is that maybe we need to kind of revisit again the law and look at past experiences, how it's being done, what do we need to do, to be able to deal with this, moving forward. Because somehow we always end up being short. And I know you're saying that in the next year or two it's going to be going down, but I think maybe we need to review what exists, review at some of the past practices and make recommendations.
I think if revenue and taxation's technological infrastructure is improved such that tax returns are scanned rather than inputted, that will provide more real-time information. And then what has been in the past, we won't necessarily have to be estimating, because we'll have actual tax refunds, actual information based on actual returns filed.
And that's one of the reasons why I am really Speaker, that you approach you about e-filing,
Yes.
not only for income tax,
Right.
but also for GRT.
Yes.
It's very important right now. It's very time consuming, even for both income tax and GRT to input those numbers. Scanning is not a problem for future reference, and we can scan the return for future reference, but the numbers there, when they're actually electronically filed, it's there. I mean, it's just a matter of promoting it and getting the resources to move forward on the e-filing.
Thank you. I was just going to get to that. So that's a plug to try to get the e-filing bill out.
Yes.
And I just want to bring up a point that only 25% of the provision is something that we can book as actual in a fiscal year. So there's still 3/4 of it that has to be an estimate. And I think my bigger concern is we're going to have a lot of employment growth, hopefully, if the things go through the way they're supposed to with the build-up. And, your income tax refunds should flux, or they should go higher with the employment growth. So is it right to use a 3-year average in the calculation of the provision, or should we look at maybe employment numbers and maybe add some other things in to try and estimate those refund payments?
Yeah. You're right, and going back to your data on the EIC, trying to pinpoint what is the increase by level of taxpayers is in a way that even us, when we look at that, your way of looking on those brackets, it's really an estimated amount that probably should grow in at least every year. Will be a $2 million increase in EATC.
Senators, any questions?
It just sounds in this discussion that I don't know that the formula is what's wrong. It's the operationally working together, that when you start to see spikes in employment, and when other agencies start to see, when Rev and Tax start to see those kind of increases, that should raise a flag to revisit at some point. Because if all things being normal and your regular growth rates are in existence and your formula is not bad, what's bad is when you get those spikes. So maybe it's just a tweaking of the process as opposed to a complete revisit. That a little bit closer working relationship between Rev and Tax, DOA, DOL, when these spikes hit, that hey, let's go ahead and redo our formula for this year or this next quarter, because we're seeing rapid growth in this area, so we don't want to end up having a shortfall at the end of that particular fiscal year and not factoring that into our budget.
So, item number 5, an estimate for provision for income tax refund payment details.
So, John, this is more of a housekeeping matter, similar to the debt restructure. We just haven't received the information yet on the detail of the 12 and 13 provision. So the averages plus the additional.
I just want to comment that when they did the budget, we did a rough estimation on but we have a more accurate one now. When we did another analysis, actually the 2012 anticipated provision for one actually went up by $2 million. It's about $107 million, and the 2012 actually went down by $1 million. So I can provide those documents.
Okay. Thank you.
So just to recap, I'm sorry. Just to recap, you're estimating for for calendar year.
For fiscal year 12, we originally
For calendar year 11.
I guess if you go back to the charts again that Chris showed in the beginning.
So
Yes.
10
So
and
it'll be
11.
like you're looking at 10 and 11.
Okay. So for 10, the estimate is
For fiscal year 12, we're estimating originally that's in the budget is 105. That we're looking at now 107. So it has climbed a couple million, and that's because of the more data that we received. I think that's the reason.
So you'll adjust your numbers to reflect.
Yes, but so it'll basically decrease it by $2 million, or not even. It's only 25% of the gain. So there'll still be a potential under provision according to this. I think one of the other issues too, though, is are the tax year, I believe the tax year 2010 refunds are included in the $344 million?
Yes.
Okay. So essentially that would be under provision if we pay for all those out of the
Okay, no more questions for item 5? So item 6, and continuing appropriations.
Okay, so this is a matter that was brought up in the SES last year, and it's the issue of continuing appropriations. And when we query the system, it looks like there's roughly $15.5 million of continuing appropriations in various funds. The majority, I think, are general fund, and then there's several throughout different special funds. And the discussion that we wanted to have is, looking ahead to the future, given the fact that the deficit is where it is, what is the position or policy call of this group with regards to continuing appropriations? Should it be criteria-based? Should it be based, on whether there's a surplus run in a given fiscal year? Should it only be for federal matching grant funds and MIP and capital projects? And so we just wanted to bring this matter up for discussion, because essentially if we don't run a surplus and these continuing appropriations get filled, then something else in the budget is going to be short. And so we found this to be the case over the last several years when these continuing appropriations are filled. And so we wanted to get the feedback of the members on that issue.
Does anyone want to take it?
First of all, Chris, where did you get this number? Are we when we say continuing appropriate, this is what you estimate is right now in 2011, correct? Not because this number, I was looking at the audit, and the audit has a number of around 6 million, and that's but as of 2010 though. So that's why I kind of.
Well, this is what's in the AS400 as of probably about right before the supplemental budget.
Okay.
We looked
so
at
it
it.
is current year.
Well, it would be
Year-to-date?
fiscal year 2010 and back. So there would be appropriations from those years that are still in the system as available.
Because, you know, I remember way back in the very beginning, the continuing appropriation always was a number that was never, was always fluid. It was never exact. And really, I'd like to hear from Department of Administration, what are their rules as far as when they do recognize it, when they don't, no longer allow it to be carried over. Because right now, the number that's in the audit always is based on actual invoices or valid purchase orders that are shown. So, so what is the criteria that Department of Administration currently uses to determine whether or not to book the continuing appropriation? And then we should look at from there as to whether or not that's valid.
I'm not sure if we're talking about the same issues. I think the continuing appropriations would be a carryover from the previous fiscal years that wasn't filled. So, for instance, if you had your budget and you only got 90% of it, and the next year's Budget Act allowed you to carry that over, so it would be an unfilled appropriation until you receive that. And so there's about 15.5 million of those within the AS400 system. Is that the same one you're talking about that's in the budget, or are those actually like prior year obligations?
Okay, I'm talking more, I stand corrected. I'm talking prior year obligations, and you're talking continuing
appropriations.
Okay,
correct.
Right. But I'll give you an example. Like, for example, the legislature and the autonomous entities, judiciary. If you look at the audit, those numbers, DOA may owe, let's say, for the month of September or October, but they eventually get paid off. Right. You know, continuing appropriations to, quote, autonomous or independent agencies all get paid off. So if you take away that number, how much is left over? Because I thought there was no carryover except for maybe a handful.
The number is 15.5. So it didn't include any of those. So you're talking about the invoiced appropriations that aren't filled at the end of a fiscal year. Usually they get filled in the first quarter of the following fiscal.
Or even later.
These are more like appropriations that carried over, but they just haven't been used, or there was no money to fill them. For instance, some of these are bond funds, which obviously we would want to continue because that's money in the bank. Construction projects. Yeah. But other items like this are there was an appropriation for the JFK lease of $4.5 million from 2009. That was never used, so it's still on the books as an appropriation available to be used, and that's what these represent. There's several. There's 15.5 million of that.
Okay. So that number is going to come really from BBMR.
Yes, correct.
Okay, so we'll need John to have and maybe while we're talking, is for him to provide more. What is the nature of these? Because again, I don't understand the nature. Mm-hmm. Because going back to the JFK lease that you talked about, that was paid through a tax offset.
Correct.
Okay, and therefore we didn't receive any cash, we didn't pay any cash, but it was paid. Therefore, the appropriation for that should have been wiped out because it was in effect paid, even though no cash passed because it was an offset, because they were allowed to offset against GRT. So we need a detail from John Rios here at BBMR.
And that's why it's...
And then we can discuss more in detail what should be the appropriate criteria for continuing them on.
Very good. Thank you.
Well, that's good. So we can set, the policy, because I know many times individual departments and agencies would actually come over and ask that, knowing that, yes, there may be a shortfall, is that can we just provide a provision for a continuing, appropriations. So I think a criteria need to be set for the entire government rather than it being done individually by departments. So that, again, we can have that then as a continued discussion in our next meeting. Okay, this on item number 7, this probably maybe Doris you might be able to speak to this, but prior to, we can ask Chris.
Sure. Let me just explain item 7 a little bit. So not sure about the accuracy of the information here. This came about when the executive summary was released on the government-wide audit, and one of the bullets in the executive summary mentioned that there was $13 million of 2009 and prior year obligations that were recorded and recognized as liabilities in fiscal year 10. And then upon further research, trying to find out if DOE was included in that, apparently they also had another $13 million of 2009 and prior year obligations that were recorded. At least that was the feedback I received yesterday. Because this is just general fund, the first $13 million, and DOE is a component unit. So I think there was an additional 13. So we just wanted to understand a couple things. One, what is the nature of the transactions that were recognized that were that old in fiscal year 10? And two, what, if any, are there fiscal controls that didn't happen that allowed for that large of an amount of money to go unchecked and unpaid? And what's the aging on this? Is it mostly 2009, or is a lot of it 2005, 2006? So I'm not sure if anyone can speak to those questions.
I just had a brief conversation with Chris Woolsey just before coming over here to actually, because when I saw your agenda, I did call him to ask about what that number was. And the number that was banted about during the discussions we had with DOA was somewhere around 13 to 15 million, and it went as high as 26. The final number ended up only being 6 million, and a total of actually 13, of which half was DOE, but then that did get recorded already in DOE's financial and its audit. So the number, according to Chris, but he was just kind of talking off the top, and I didn't have time to really go into detail, it was around $6 or $7 million of final prior year obligations that were recorded in FY10 budget. As part of the closing procedures for the final audit number. And maybe Benita can then talk to what they were.
Is that 6 million just general fund?
General fund.
So then DOE's was an additional 13 million.
No, 6.
6
the
million.
total number was around 13,
okay.
Of which approximately half and half.
Okay.
And DOE's was already recorded as part of their 2010 audited numbers. Okay. So the balance was another 6 or 7 million. Now the one number that he said, the largest number that he could remember off the top was for the fire department, for the supplies to furnish the ambulances. Every time they go up there and drop off patients, then they pick up supplies. And there's been a very poor accounting because it represents several years. That was the one number he did say, and that was around 900,000. I don't know what the rest is, because he said the rest were a lot of small stuff, because I asked who were the top 3. Mm-hmm. And the one he could remember was GFD, that they owed GMH for several years, for ambulance supplies.
Would it be possible to get the detail on that?
I was going to suggest that we'll provide the detail at the next meeting.
Okay.
Yeah.
Great.
But could that also be not just for the meeting? Because I remembered I saw this listing at one time that was submitted to the Speaker's office where a payment was going to be made, and then I saw a list, but it wasn't, complete. It was a list of payments being made, and that's when I was discussing that with Chris, is that I think that that's a list that really should be provided, maybe even quarterly, not just for the meeting next month.
Regarding prior year obligations?
You're right. Yeah, the list of all of these prior year obligations and who have been paid, how are the priorities being made, and if there are any interest as well being accrued for any one of these prior year obligations. And in addition, I don't know if this would also help, but the other thing would be as other obligations of the government that's been taken to court. Take, for example, the furlough for teachers, where we're seeing every year the interest has been increasing. Mm-hmm. And we don't hear about that all the time, and I think that having that information sent, not just to the legislature, but primarily to OFB, then that is something that, we can actually start to, to take care of, because the longer we put it off, the interest gets higher. And so it's important to know which ones of these are accruing already interest, and then how then, and what are your recommendations, or how have you been prioritizing payments?
Mm-hmm. So maybe we can meet with you later, and we'll look at the reporting format that we've been giving to your office, and see if there's anything that needs to be improved and additional information that you may need.
Madam Speaker, if I may, when you said teacher furlough, an item that I think it's since 2008 that has been on the books is payment for Mr. Regis of $250,000, and it's 6% every year. So right now, I believe we're up to $300,000. Honestly, what has happened. Now that man is in the Philippines trying to take care of himself. And I just, the priorities of the government, and it's due him. It's gone through court, it's gone through arbitration, and, if there is a way we could figure this out, that needs to be on this list. Thank you.
Yeah, we'll probably have to look at if we're referring to the same thing, the claims fund. I know that I don't think we have any more money in that account.
That's true, and and especially these that are set up by court, they all have interest. So it'll be good to know when those accounts have started to accrue interest.
And just to add to that, maybe in the detail you can let us know if those are interest bearing or not. And one question I had is if some of these obligations that were recorded are interest bearing, does that start from the date of invoice? Does that start from the time you recorded it? And I think that's another issue, because that would kind of lead to how do you prioritize these things to be paid.
Well, Mr. Regis is court ordered, and it is interest bearing.
So that would be at the top, you would think.
Wow, we're moving along really well. We're now on item 8, the status of the convenience fee implementation for the credit card. So that would be probably...
That would be DOA.
I was waiting for you to finish. I can talk.
Okay.
But you were looking at...
because I saw he had puzzled face, so I said, okay, so it's you.
You were looking at him to answer, so I was waiting for you to finish. So we are working with the vendor, and where we are progressing on that one, so we hope to have that in place soon.
No estimated time?
I don't want to say 1 month, and then you're going to come back and say you said 1 month and it was not in place. So I'm kind of leery about giving an exact time frame.
I think the bigger concern is...
But I know the concern, and I know that we're working progressively to get it done and to get it in place, because the longer we wait, the more costly it is for us.
Could you just, for the benefit of some of us, because haven't been kept up to date on this, could you recap what we're going to be doing?
Sure.
Thank you.
Sorry.
I don't know what to do.
Do you want me or you?
Yeah, well, you can.
Okay. So in the Budget Act of this year, it was required that when people use their credit cards, there's a bank fee associated with that. And traditionally, that has been an unbudgeted item. And as people use their cards more and more, that number has grown to over $4 million a year. And so it's not an insignificant number. And so one of the policy calls in the budget this year was to implement a convenience fee, which basically passes that bank fee on to the consumer. So they will, when they use their credit card, will pay their obligation to the government in addition to the bank fee. And because of the credit card rules, there's a real specific way you have to do that, and that's why it's called a convenience fee. And so the Department of Administration put out an RFP, and I guess I'll let you take it over.
Yeah, we put out an RFP, and then there was a protest. And you know what happens when there's a protest? It delays everything, and it puts a stop to everything that's going on. And but that has been, well, they didn't file an appeal, so that's why we're handling it. But I just wanted to mention and that this was, we had requested for supplemental appropriation for the convenience fee, because what happens is there was only a small amount that was budgeted for the convenience fee, and anything after that, after December 31st, whatever fee that is incurred is going to be taken out of the DOA budget. And when we had submitted the supplemental, that was about, we were projecting up to June about $1.8, $1.9 million, and that's going to be taken out of the DOA budget. So DOA doesn't have any money.
Well, the Public Law 3224 actually pushed that date to March 31st. And so the deappropriation did not occur until the third quarter of this fiscal year.
Okay,
And
so even with that, that's still over maybe $1.3 million?
Right, and we gave, I think we gave you 800,000 in the
But
supplemental
that
budget.
800,000 is not for the convenience fee, that's for something else. That's another, that's for the DOA shortfall, but so the convenience fee was not addressed.
And from a budgetary perspective, that fee comes right off the top, so it has to be paid one way or another. So I think the committee's concern was an appropriation's not necessary. The bank's going to take that money from you before they get it. So
No, but the provision there is it's going to be taken out. The law said that you have to obligate, you have to take it out of the DOA operational budget, so it is affecting DOA right now.
But your request was for the bank fee appropriation, correct?
The bank fee to cover that, the amount that is going to be charged to DOA, so.
Right. So either way, it's an unbudgeted item, whether it's a bank fee or a deappropriation.
No, but the thing is, it's going to be taken out of the DOA, so right now we're having problems clearing whatever that's going to BBMR because of that provision. Okay.
For the last for the last 5 years since we started using credit cards, and that item has always remained an unbudgeted item. Okay, and even in the FY10 audit, it shows that almost 16 million overall, not just in that item of convenience fee, but also interest on tax refunds, interest on COLA, and other items. And just in the interest of equity, it really is unfair to penalize the Department of Administration because they actually have no control of it. That's people are using that as convenience to give revenue and taxation the money.
Thank you.
Yeah, okay, and then to take it out of the hide of Department of Administration really is inequitable, is unfair, because they have, it is a convenience overall for the government as opposed to having bounced checks. Okay, now we haven't looked to see whether or not, we haven't done an audit in a while on bounced checks to see if the amount of bounced checks have come down because of people using more credit cards, and that's kind of like something on our agenda. But overall, the world is moving, everybody's moving toward using credit cards for everything, even people pay to go to McDonald's, and stuff. So that's a cost of doing business, and whether or not we can legitimately charge the consumer following those, because the rules are very, very strict as whether or not you can even do that, and not, I know that I think in the IRS, right, there's a fee, right, when you pay electronically. Okay, and that's probably the only way that it's being done, correct, John? Yeah.
And
But
that's how it was
it's
modeled.
a very delicate manner. But the bottom line is, I can hear the plea of DOA. It's really unfair to take it out of her budget. She has nothing to do with, DOA has nothing to do with it. It's a cost that's going to be incurred regardless until we get in place the appropriate legislation that would allow that, quote, convenience fee. And I hear, it sounds like with being on protest, we're talking at least another 3 or 4 months probably, right?
Well,
Or, what's the
no, we are working with the vendor right now.
Okay.
We're going through the process of getting it in place. But that's, Chris, that's really a big issue for us right now.
Yeah.
And that's why I did bring it up to you before, and we brought it up in the supplemental request, but it was not addressed. That was one issue that was not addressed, and as a result of that, we have actions that are going before BBMR that is being returned because of that issue. So, is it safe to say now, Doris, that we can just treat that as an unbudgeted item and we'll go ahead and?
I don't know what the law is. Okay. All I know is from past history, it was never budgeted until, I think in the current year, right, there was a partial budget.
Correct.
Okay. Recognizing that
Yeah. So that kind of segues to the last item of unbudgeted items. And what we have is a accounting to the best of our ability, and everybody has this exhibit. Oh, sorry. So this is an accounting to the best of our ability of unbudgeted items from fiscal 2010, 11, 12, and 13. And before anybody has a heart attack on the 12 number, let me just go through it and explain it. So the executive budget request came in April 8th of this year. Items that we know are either short or not included based on our analysis that are of immediate concern are the JFK leaseback additional term rent, $1.6 million, the solid waste operations fund court-ordered repayments of $2.3 million. That's the $192,000 a month that has to be paid back to that fund. The utility bank looks to be short by about almost $4 million for power costs, and this, of course, takes into account the LEAC adjustment that's coming up in August, and also a couple other increases that are being petitioned at the PUC. And then there's some minor unbudgeted on the power and water, and the mental health permanent injunction, $1 million short. There's $3 million budgeted in the executive request for the permanent injunction, but there was the one payment that was deferred, I believe in March or February, that got pushed to fiscal 12, and so that's what the $1 million is there. The other items, you know, if the bond is put through for the income tax refunds, then I think items B3 and B4 become non-issues, and that's the $3.5 million for income tax refund interest, which was not included in the executive request, and also the $20.5 million of the under provision, which we talked about earlier. Now, item 5 has been clarified to a certain extent, so we know that it's not 26 million, it's about 13, and
That happened in 010. That was cleared in 010. The audit cleared whatever number there was.
but these haven't been paid though, correct? There are obligations that we have to pay still?
That's a cash issue. Okay.
Right.
But the payable, the due,
Correct.
is already recorded in
Right.
DOA's books.
But if we want to pay those
So it's in her
items-
accounts payable,
Yeah.
okay? It's already in the account, and it's already part of the $300-some million deficit. Therefore, you can almost strike that number.
It shouldn't be here.
It should not be there.
So it's not on budget. I mean,
It's already been, that's already reflected in the 010 audit that we just sent out to all of you today. Okay. So that number's there, so that 26 can be striked out. What may be unknown is that come 012, there might be other issues like that, okay, of other prior obligations, because we had a long discussion about this, and it really is a control issue, is how come agencies are holding back invoices and only turning them in. How this kind of came about was when the governor came in, he sent out a notice to all agencies, give me all of your bills. We want to record all of them. And that's where this all came about. Okay, and so finally Department of Administration had to go through, you know, one by one, and it was finally determined it was an additional $6 million that should have been charged in 09, but were being held back because agencies did not have the budget to pay them, and therefore they didn't submit it to DOA. And the governor this year said he wanted to start the slate clean. I don't want to have any of these, you know, anymore. So we'll see how that comes about in future years. If agencies, when their budget is short, they don't submit the bills because they know they don't have the appropriation to pay it. And see, that's to me is a lack of budgetary discipline, which is a whole new, which is another area separate from this, that agencies are overexpending, but we don't know about it until it gets slipped in the following year or later.
So what would your, I guess, position be on, so obviously from an accounting perspective, the prior years is not unbudgeted, but you said it's
It
a
is
cash.
unbudgeted in the sense that Well, you probably wouldn't see this because a lot of the agencies, if you were looked at the individual agency budgets, there was enough room overall in some of them to pay for them. A good example is, let's talk about Department of Corrections 2 years ago when we got hit with that $10 million bill, for the treatment of off-island, the housing of off-island prisoners. That was a one-shot deal. That was $10 million. And it was charged against Department of Corrections appropriation. And if you were to look at it, they were overexpended by $10 million in their operations. But nobody, it was an obligation due to another federal agency. It was recorded. It was part of the deficit. And there was no supplemental appropriation to pay it. And DOA has just been paying about $250,000 a month. And that bill is almost now fully paid. All right. So the prior year obligation is kind of like the same thing because most of the agencies did not overexpend this year in the 010. And so there was, pardon the expression, sopla in some of them to absorb that without anybody going overexpended. And so, but the point here being is that they were held back. And DOA and Benita and her people had to spend a good deal of time sorting through that and deciding this is good, this is good, this is bad, no, type of thing. All right.
But if we don't structure that payment, it's coming out of cash from the current budget, and I think that's the concern of from a budgetary perspective.
It's accounted for. How it's paid
Right.
is a different issue.
Right.
But it's accounted for, is what I'm saying. And so this $26 million would not be an unbudgeted item because it is cleared, and assuming budget discipline occurs, we won't have that.
So Chris, what you're trying to say is we will be using current year receipts to pay for those.
I
that's what's been
assume-
happening, yeah.
Well, I mean, that's been an issue this year, and so I assume that will continue on this additional 13 million.
Yes.
And so it really is a budget issue because if we
It's
pay
a
it
cash
next
issue,
year,
not
or a
an
cash issue, but
not an
Cash
appropriation issue.
then we're 13 million short in next year's budget because we're paying for 2009 expenditures in fiscal 12. So from a policy perspective, what can we do? Should we try to structure it? Should we just continue this the way we're doing it now, pay as you go?
I mean, my conversation with Chris was, how do these agencies get away with it? Submitting a bill 2 years later, and that's, DOA is going to have to respond to that. Because,
Well, we have put a system in place this year. We're cutting off requisitions earlier, and purchase orders have to be submitted earlier. It has to be fulfilled, so that will cut back on those things.
we've been saying that for many years,
No,
and it's
but we
still
have-
each year we always deal with these prior year obligations.
So that's what we have. We started this year. We just implemented that. We have an earlier cutoff period.
Just looking at possibly adding another item of unbudgeted is for the lawsuit on the employees' meritorious pay. The law requires payment for those that received outstanding of meritorious. There's a lawsuit, and I don't believe that's been budgeted for either the current operations or the future or the past.
We commented on that, and nobody has an idea what that number is. And until it goes to court, right now we've recorded, that's only a footnote in the audit, that there are pending lawsuits. The amount is yet to be determined, because we did look at not only that, but also the one with the public safety personnel and all those others. For the work hours owed or something like that. All those are indeterminable at this time. They have been footnoted in the audit, but the exact amount, nobody really knows for sure unless DOA or BBMR and or DOA's HR people do some number crunching to determine. But yes, they are duly noted, but the exact amount at this time has not been resolved because it hasn't been resolved in court.
Well, my comment is it shouldn't need to be resolved in court because the payments are required by law. Why should the employees have to sue to get the payments required by law. And it shouldn't be too hard to go through the personnel records and find out what those liabilities are and to budget for them so they can be paid according to law.
So the suggestion or the policy call that you're presenting is to basically budget for those things and pay for them if they're due according to the law.
That's right.
Not to be the, not to be the thing. We made a recommendation that the law be changed because the way it says is that upon, quote, superior performance, you automatically get that amount. And it's hard for me to believe that the entire government of Guam has superior employees. You know.
But that would be a perspective, right? I mean, so we've already got people that qualify for it per the law. So I think the point is valid, and it's certainly worth consideration that rather than have this be pursued in a lawsuit, you know, maybe the government should consider looking at the law, and maybe the Attorney General can look at it if they haven't already, and determine, is this something, an obligation that the government should pay? I don't know. It's certainly worth discussion. And thank you for bringing that up because it reminded me of something else that wasn't on the list, and that is the lawsuit currently, I believe, in court over the purchase of the land at Ledzong. So that, I believe we had set aside approximately $3 million for that piece of property the court had put into an account. I'm hearing numbers as high as, I think the request on the court from the plaintiffs was as high as in the hundreds of millions. I'm hearing numbers as high as 30 million. So again, this would become an obligation of the government that we would have to find money for. I'm not sure, and I don't know how that's going to play out, given that this whole project is under the court's jurisdiction. And as we know from past experience, when the court says pay, they just take it out of our account, and that creates other problems for us. So I think we should add that to the list. I don't know what the end date is on that court case, but it's currently in progress, is my understanding. Does anybody have an update on that they can share?
Well, I think one thing we have to consider is that there's current legislation, I think that is either going to be on this session or it was in the prior session, that the solid waste division is going to be an autonomous agency, or have that ability at least. So I would imagine that that would come out of fees. So I think that where it's premature, really, I mean, we can anticipate it, but it would make sense that that kind of purchase amortized over a long period of time would end up being part of the fee for service.
And Chris, can I just make one point? You know, we'll get clarification, but on item number 1, the JFK lease back, the amount for 2011 was 225, right? I think it was 225. And if I'm not mistaken, and again, I'll provide the committee here with clarification, I believe that was bonded for. And then moving forward, the amounts, and this is the discussion about additional rents, the 1.6. Moving forward, I believe that should have been budgeted by DOE, but if it was not, okay.
I know, and I think that you need to go back and look originally, because when this was first discussed, is that, and if you look at the dollar amount too, in terms of what we're paying, is that we had, and I think the mistake was, of course, is leaving it open-ended, where the $9.8 million.
Okay.
No, originally.
Oh, the original was
$9.8 million. And I feel basically they took advantage of that amount was, you know, theirs to look at and to use when that wasn't the original intent, because that amount was for actually 4 or 5 other projects. So it's gotten to the point that the amount is so exorbitant that even OPA had questioned the maintenance of the facility for one facility at $1 million versus 4 other schools at $1 million. And ultimately then the amount that was left was only about $1.4 million that's supposed to be used out of that 9.8 now to to pay for the expansion of Okudu High
Okudu,
School.
Yeah.
And you know, you need to really go back and look at that contract as well, because we were also thinking that even the equipment, the collateral equipment, should have been purchased, you know, for the new site. I mean, they're telling us now it's not, but we don't know, because we have.
No, that was a discussion, Madam Senator, Speaker. That was a discussion, and the collateral equipment was to have been included. Are they now backing down?
That's exactly,
Oh,
no,
boy.
that's the reason why I'm saying we have no access to the contract. That contract's between the governor and the company. But from what I understand, when we were discussing it here in the legislature at the time to authorize this, was that collateral equipment was to be purchased, yes, by the company.
Okay. Well, again, it's my understanding that the actual lease agreement is between CAPFA and
And the
DOE?
governor. No,
No,
not
the
not
governor.
at all.
Okay.
The governor.
Yeah, so the
Okay.
governor. It's not us.
Yeah.
Okay.
And not the legislature and not DOE.
No,
Surely
it's
not
the
DOE.
governor, because the other ones, and, you know, I'm glad you brought that up, Madam Speaker, because, you know, I've always been concerned about how costly JFK has been. You know, we're paying 7.1 for Okudu,
The
middle
4
school, and 2 elementary schools, and we're going to pay 5.1 for 1 high school, 7.1 for 4 schools, and 5.1 for 1 school.
Well, now it's 6.7,
6.7.
because you have to add the 1.6.
The additional
maintenance.
rents.
What is this?
That's the additional rents?
Yeah, they're
For
calling it-
maintenance, is this the maintenance?
They're
The-
calling
Because
it-
I had cautioned them, I said, you know, you guys are, when Andy Leon Guerrero, I said, what are you guys negotiating here?
They're calling it additional rents, but it's inclusive of
Insurance.
insurance, maintenance, other
There's also like a
fees,
reserve fund for
and
capital
reserve
maintenance.
funds. Again, you're right.
So we're paying
so-
1.6 million for 1 school compared to 1 million for 4 schools.
Yes.
Well, there was a time issue. We needed to get something done very quickly.
And money was no object.
The 9-month time frame, I know, had something to do with the price tag, but again, that was before.
No, that's not even true, because they told us that the cost would be the same. It should not cost anymore. I remember in my conversation with Mr. Berdalio at the time, and he said it's not an issue, because we were asking that question, is it costing this much because of the 9-month time frame, and because there have to be 3 different shifts of
Should
workers
more-
coming in?
yeah.
And they said absolutely not.
Mm,
So
okay.
they can't use that argument at all either. This
I-
is
I-
just
that's what
a
I've heard,
very
yeah.
expensive school.
And I agree, because we did see what the cost of the other 2, and it was cheaper.
And it's a very nice school, I may add.
So is there any other questions on the unbudgeted items? And so we've completed everything. So I think there are several items that we need to come back with for the next meeting. And I'm sure that as Chris starts to prepare the next agenda, then that he'll be sending to you what the, items that
Sorry.
would need to be brought up to the meeting. So if there isn't anything else, Chris, any
I
last?
just wanted to remind everybody of the dates. There was a little confusion, but the next 2 meetings are going to be on Fridays. It'll be on the 22nd and the 29th. And if there's specific items you'd like to discuss on the agenda, please just call me or send an email, and we'll see if we can add those to the agenda.
The next meeting is just the day after Liberation,
Yes. yeah.
early morning.
10 o'clock. Yeah, 9 o'clock. Oh, that's late. 9 o'clock's late. Okay. Well, anyway, it's,
For a later time?
Oh, no, it's fine with me. I'm an
you
early
want-
person,
yeah,
so
okay.
it's for those people that wake up late after the Liberation.
oh, no. No, just remind everybody, it's a regular working day.
Yes,
We
they
got
have to come
coming
to
work at 8, and we're having the meeting here at 9. Hey, Pablo said. So it is 3:25, and the meeting, what's the name of this committee again? Special
SPC.
Economic Service meeting is adjourned. Thank you very much.